stock pitch for Tata Motors. So let's start. So first company overview. So Tata Motors was established in 1945 as an engineering and locomotive company, and it produced engineering products as well as locomotives. So it today is one of the leaders in commercial vehicle space, and it is also present in the passenger vehicle segment, although it's losing market share in that space in India. So Tata Motors has operations UK, South Korea, Thailand, Spain, South Africa, and Indonesia. Its biggest subsidiary is Jaguar Land Rover, which was acquired in 2008. So the company is engaged in engineering and automotive solutions, automotive vehicle components, manufacturing and supply chain activities, vehicle financing, machine tools, and factory automation through its subsidiaries as well. So my investment is on Tata Motors is a long, basically buy the stock, and I expect it to be to increase by 11.85% in the at the start of the next fiscal year. And the target price, I believe, for Tata Motors stock is 389.74 rupees, and the current price is 343.55 rupees. I believe Tata Motors stock is currently undervalued excessively due to the coronavirus pandemic and didn't recover properly after the shock. So I also believe that Tata Motors are in a better position than their rivals. So the reason for this is, first of all, simplification. JLR is reducing the number of platforms from 6 to 3, hence the commonality of the scale, the economies of scale will significantly improve. So JLR is also evolving its battery technologies, and which are supposed to be the future of vehicle growth and will significantly improve their standing in the market. So capital expenditure, it's about capital expenditure, with simplification across the process, across processes, and due to the greater commonality between architecture and then models. So 2.5 to 3 billion British pounds of capital expenditure is adequate, and the Indian passenger vehicle deserves special mention with a multi-higher EBITDA margin of 4.9%. So about the recent performance, financially, JLR performance wholesale had a 2% year-on-year growth and a 20% quarter-on-quarter growth. And there has been a recovery in China, and there has been an increasing acceptance of the Defender model. So there, JLR's EBITDA margin stood at 13.3% and a year-on-year growth of 10.5%. However, the quarter-on-quarter growth was flat. So also there has been continued improvement in the India business of Tata Motors. So the standalone revenue increased by 106% year-on-year to 200 billion rupees and 16% higher. So and the combined revenue increased by 89% when we combined Tata Motors and JLR. So for passenger vehicles, EBITDA margin was 4.9%, was the highest of 10 years, while the commercial vehicle segment EBITDA was 9% in the fourth quarter, which is a very great number for this industry. However, due to the second wave of COVID, demand was severely impacted in April, and they're expecting a 20% of their normal demand. So this has offset the impact of rising commodity costs. So Tata Motors has taken a total 3.5 to 4% price hike in the current year. For JLR, the outlook is slightly different due to the shortage of semiconductors, which are used in large quantities in their models in respect to the Tata Motors business. So about 7,000 units were not sold due to this shortage in semiconductors, and this shortage worsened in the financial year 22, but there would be recovery by the second quarter of 22 financial year 22. So the new Defender model posted a wholesale sale of 17,000 units, which is a very great number. And the company has also hedged itself from commodity inflation in the near term. So there would be a break-even free cash flow investment of 2.5 billion uh, British pounds in financial 20. So about the future prospects, we expect improvement in the financial 22, though the first quarter would be weak. So margins are likely to be weak due to input cost pressure and negative operating leverage. So financial year 22 may not be a good year for cash flow perspective with JLR in the India division expected to be a financial free cash flow break even. So, however, they have a reimagine and refocus strategy that aims to improve the quality and speed of delivery, cost per unit, and supply chain efficiency, and the quality of sales supported by digitization. They are also executing plans for the efficiency to be 2 to 3 times faster than their larger peers, and I expect the company's performance to pick up in the second quarter of financial year when the volumes normalize and the free cash flow turns positive. So there are also variable marketing expenses. So this part of the change structure. The JLR will not push inventory. Supply will optimize and supply will be optimized to satisfy demand. So marketing expenses will be under control as the focus is on the quality of sales. China has also one bright spot was that China had issues in 2018 and 19 for the JLR brand, but those have been addressed, and the dealers are making an improved return on sales. The imported models are also doing well, and significant scope exists in this business. So I have used a discounted cash flow model for valuation. So it basically uses the estimate of the investment based on expected future cash flows. So DCF analysis basically attempts to figure out the value of an investment today based on the projection of how much money it will generate in the future. So we may look at the financials here. So yeah. So I use three valuations of the discounted cash flow models and the target I used three variations of the DCF and the target share price came out to be as you can see in the bottom table. So as you can see, there was a sharp dip in the Tata Motors share price, although it was in a better position of its rivals. Hence, it should have been, according to me, a slightly lower dip. And I believe it was mostly undervalued in financial 2020, and there has been correction in the price. However, it's still undervalued. So my thesis is Tata Motors is undervalued, and by the DCF valuation method, it is undervalued by 11.85%. So I recommend buying the stock. Thank you.
Down the free or mobile application now.